So we all know what a presentational currency is. It's the currency that you present your accounts in. But is that necessarily what we call the functional currency? What the currency is that the company functions in? Now that's normally the same, isn't it? You know, if you're a UK company, you'll present your accounts in sterling because you kind of function in sterling. But it's not always the case. So, how do you decide what your functional currency is? Well, you do it by looking, as it says there, primary factors first and then secondary factors. So what are these primary factors that help us decide what our functional currency is? Well, it says first of all, you've got to see what is your primary economic environment. And you might think, well, that's the country that I sell in. And pretty much it is, because it's the influence on sales prices. So which currency has the most influence on sales prices? Now, if you're a petrol company in the UK, then it might not be the UK, might it? Because the influence on the sales prices will come from the oil price, which will probably come from the Middle East or somewhere. So, you know, not necessarily the UK. It's also, though, what currency influences your wages? What currency influences your material prices? What currency influences your other production costs? So you look at basically what is it that's affecting you? What is your primary economic environment? And there's a couple of more primary factors. It's the currency of the country, I'm supposed to say country, it's the currency of the country whose regulations you are guided by. And when we say guided by, that they determine your sales price. It's where most regulations are. Or it's where all your competition is. It's the country where the competitive forces determine your sales price. Basically, where's all your competition? So, yeah, they're the things that help you decide the primary economic environment. Now, you might think to yourself, well, hang on, they could be 2 or 3 different countries then. So, it goes along to the secondary factors, which says, well, what currency do you finance yourselves in? That would be an indicator as well of what your functional currency is. And it also, let's say you're, let me give a bit of room here. Let's say you're a subsidiary, okay, and the parent company tells you what to do all the time. You're in the UK and your parent company is in the USA. And the parent company tells you what to do. It tells you what the sales prices is, tells you how much to pay, everything. What is the UK company, what is our functional currency? Well, it would have to be the dollar, wouldn't it? Because they determine the sales prices, they determine the labour costs. It'll be their regulations. We won't finance ourselves, they will. We're completely under their control. However, you could be under their control, but you could have a lot of autonomy. Autonomy meaning you make your own decisions. So that's the other secondary factor. How much autonomy have you got? The more autonomy you have, the more likely, in this case, that it would be sterling that would be your functional currency, because you would have more influence, and that country therefore would have more influence on sales prices, labour, etc. So autonomy, you know, look at the number of transactions with other entities. You know, are all your transactions just with the parent company? If they are, you're not very autonomous. Do you meet your own debt? If you do meet your own debt obligations, then you are a lot more autonomous, aren't you? So there are a couple of things to account for. So it's basically that screen there that I would try and remember for functional currency.